So I'm going to start. I guess more person will join. So I want to welcome everyone to our second edition of Stock Talk. We'll be discussing about the economy, investment tips. Also, we'll talk about like few company overviews, and we'll take some some answers. And I say answer, we'll take some questions. I will try to answer the questions as best as possible. Now, tonight, please welcome our special guests. We have Miss Jodian Aris and Mr. Rowan Francis. So I'm gonna give them the opportunity to give like a short introduction. So we'll start with Miss Jodian.
All right. So hi everyone. Thanks Lance for the invite. I am Jordan Aris. I work in investment banking. I've been doing research for my entire working time frame. So I've done research as a government advisor. So I think that would have been like the larger part of my career, and then I would have transitioned into investment banking. So I'm pretty much having a research background. So I would have worked as an economist in the government and then transitioned to being an analyst in investment banking.
Cool, that's nice. It's nice to have you back on our program. So, Mr. Rowan Francis?
Yeah, I must say she's very distinguished. So yeah, for who don't know me, Rowan Francis, entrepreneur, co-founder of Vasca, and we're rolling out some new electric cars and new EVs across the region. Also CFA candidate, so working along that side as well. We're working as a credit analyst. So that's it.
Yeah, that's nice. So, disclaimer: before making any investment decision, please consult your financial advisor, and because each investor profile is different, and we cannot give specific advice on this channel. We'll try our best to give opinions, and we'll try to help beginner investors. But please refer to your licensed financial advisor for recommendations. So, to our viewers who just start, I already stated you can just put your parish or your city. And if it's your first time on my channel, please like and subscribe and share this content to someone else. Share to 3 persons at least. And let's get the ball rolling. So first question I want to ask Mr. Rowan, and then I'm gonna go on to Miss Iris. In light of the current economic situation, like currently there seems to be some the environment seems very pessimistic. What is your outlook for the global economy?
Well, pessimistic is an understatement still, but most people, the latest news I'm seeing recently is a fall in inflation that drove the stock prices up a few basis points. You probably saw it over the week, right?
Yeah.
So yeah, but I guess we still have service side inflation and we still have monetary inflation. And that's a very long-term problem for central banks. If you look at the global financial markets, you will realize that jobs are quite resilient. The last data look at, we have wage growth up in the US 5%. We're not seeing the equity market. The market hasn't actually discounted the rise in interest rate or the rise in interest rate we expect. So not to go off tangent, whenever time inflation passes 5% in history, the Fed funds rate always end up having to match inflation. So sometimes it takes the Fed fund rate to reach the same level as inflation to see some form of cooling down in the economy. The Federal Reserve is going for 5%, which they consider is equilibrium. So really and truly, Lance, it's the same thesis I have 2 years ago is unprecedented monetary policy as a percentage of GDP. So we expect interest rate cycle to now take effect going into the next 2 years or so.
Okay. So regarding inflation, I expect the Fed to raise the rate few more points up to 8.
The Fed have approximately about 5 more cycling interest rate cycling hikes. And the reason for that, Malance, is the equity market really, really, truly haven't accounted for the interest rate hike. If you look, global equity market falls 16%. And if you look at the type of inflation that we're dealing with, it's a different beast we're dealing with. If you look at one of the main drivers of service side inflation will probably be the oil, right? The oil shocks that is in Europe. And Biden has just made the move to go ahead and use the nation's strategic oil reserve to aid in the inflationary tax on consumers. So probably that's one of the reasons why we're seeing inflation going down into some senses. But monetary inflation is still a threat.
Okay.
Mhm.
Miss Iris, anything you want to add to that?
I think in terms of the pessimism, it's really linked to general expectations of lower economic activity. So I think even if you look at like IMF in terms of their outlook and their projections, you continually see, each time they come, World Bank comes to that projection, it's going downwards. And so that would have, impacted into, I guess the psyche of thinking. If it is that economic activities are projected to decline, then what does that mean for businesses? What does that mean for me as an individual? If my company is not going to be making as much, will they be needing as much staff as they currently have? And so that sort of thinking, I think, matters or, pans out into how it is that people process information. And particularly for people who would have, probably been of working age during the last recession, I think it wasn't so far ago. And so there's still some sort of freshness of what it is that happens during a period of, economic downturn or, continuous downturn. And I think that plays into some of the pessimism that you probably are seeing in terms of persons are just not sure what to expect. I think as Ron would have mentioned, in terms of the inflation and the interest rate, that also factors into thinking. So persons are watching inflation and you kind of see it go up and it come down and you think, oh, it's cooling, and then it goes up again. And that sort of uncertainty makes people nervous, because if the central bank is reacting to inflation, but we're not seeing a downturn in inflation, or even if we see it dip a little bit, it goes back up, then what does that mean? And I think right across, you see where central banks are very aggressive towards the moves that they're making. So you're not seeing, small moves like, at the start of it when they just started to raise rates. You're not seeing these little baby moves. They are really becoming strong and aggressive. And so it points to the fact that if it is that we're not seeing this inflation coming down, will they continue with that aggressive stance? And I think probably in mid-year, I don't think anybody necessarily anticipated that probably the BOJ policy rate would be moving towards 7 at year end, but that's where it is. And so that factors into the thinking, if it is that rates are higher, what does that mean for the financial companies? What does that mean for persons who want to expand the business? So all of that factors into and adds to more of a negative outlook, which I guess spurs the pessimism.
Okay, so to me, based on that and the overall market, it seems the market is staring down a recession then, basically, to me, because the whole feedback loop, everything just seemed to be leading to a recession. A few months ago, they called it a technical recession, but based on the numbers, it would seem that we're in a recession.
Yeah. I mean, we have been using a lot of words. Remember, we're transitory with inflation. And so, it's we're using a lot of words. I think it's a newish sort of time. And things are a little bit different from the textbook. I mean, you don't normally say, what we call strong labor market indicators, with this sort of thing. So I think there is the general what's happening in terms of the central bank policy rates and the impact that has, as well as the general recovery from a COVID-19. And so it's two factors kind of going at each other that, in different ways. And so you see, this sort of, what is it? It's almost like a new creature being created, and you're wondering, what we're going to call it in our way.
So to add to what Jody is saying, Lance, I feel like I read about it before, an inflation-linked bear market, but it's the first time actually seeing it played out where you have strong growth in job markets, but then you have inflationary pressure, then you have interest rate cycling at the same time. So it just the confusion. You have risk premiums very high, going up high, people moving the money all around in bonds, they can't find it to put it anywhere. So it's really a lot of confusion in the market, especially when it comes to institutional portfolio and all that. So at first I'm seeing this type of and most investors, you can see they're really on the sideline watching to see what's going on.
Because most of us, even though I'm talking about stocks and we're into this is the first time experiencing it also, because I'm only been investing like 5 years. So after going back to the textbooks and look back in history in the 1970s and see what happened and all of that. So it's really interesting to see what we can do. Most persons, I've been talking in a few Telegram groups, and persons are saying, one person quote even I think 2 days ago that we're in a bear market and persons should not invest. What are your thoughts on that? And Miss Julian, what would you say is what would you think, what short-term strategies person could employ are first, I'm going to break down the question into 2 parts. So for a short-term strategy, is there any short-term strategy there could be for a market conditions like this?
I think in any sort of market there are opportunities, and I think particularly in as they call it, bear market, there can be opportunities that you can find. So it's really for you as an investor to be somewhat, I guess, nimble and be actively watching the space to see where the opportunities, because what typically would happen is that there is, you're in a high interest rate environment, and so the stock prices fall, which means that the valuations of stocks is dipping. So there are generally opportunities there. I mean, if you're thinking about investing in general, if interest rates are rising, then you can benefit from some of those, shorter term rates going up. If it is that you're looking for short term and some amount of safety of sorts, that's an opportunity there. So I think if you look at last year, if it is that you were to look at a short term instrument, I mean, if you look at the BOJ 30-day, I mean, albeit that the principal is high, probably for some retail investors, is a fairly nice opportunity. I think the yield came out today at around 9, above 9%, as opposed to last year, probably it was 1-2% there around. So there are those sort of opportunities. There's also be opportunities in terms of the stock market, because there are going to be persons who have to, for whatever reason, unfortunate to that individual, like they may have to exit a position. And because the prices are depressed, is an opportunity for you to buy at a lower price. And, shortly after, or probably within a next earnings result period, then you could probably see an uptick, and that could be considered some sort of a short-term gain. So there are opportunities where valuable companies could possibly be seen at lower prices, and you could, get an opportunity there. But it's not a market that we're probably used to, where everything is going up and you could, not be so dedicated in your analysis, and it still probably will run up just because net profit goes up. You have to be a little bit more detailed in terms of how it is that you're looking and analyzing stuff.
Great. So basically, you're saying that investors could look for more like income-driven asset classes, like preference share or bonds and those things.
Yeah, so I mean, you could have opportunities in that space. That would be more a short term. I think probably like for your more value stocks, you may get a lower price now, but it may take a little while before you probably get a nice appreciation, relative to inflation.
Yeah.
That would be real. Probably will take a little bit longer in terms of price appreciation.
So, and the investors could expect some loss, like because, for example, a 9% bond or a 7% preference share would probably give them less than what, like if inflation is at 10% in Jamaica or 11 somewhere there, investors would maybe lose something, but it's better than nothing to you.
I think it depends on each individual investor, So I mean, it depends on you. So I mean, you have some people who don't want to lose, as much, and
Yeah.
so they'd probably choose a different sort of strategy. So it really depends on the type of investor. But in a particular, with investing any at all, there's that risk that you could lose. It's not a guarantee as much as you may do research. I think, we all did research in 2019 and then came COVID. So there is always that opportunity that there could be potential losses. It's just a matter of, making sure that the possibility of loss is something that you're comfortable with. But it is likely that you could see losses, because I mean, what may be good today in relative to inflation, if inflation ticks up further, may not be as good. And then if you continue to compare with central banks continue that aggressive stance in terms of interest rates, you may be comparing to central bank rates at 7.5, but if they feel very aggressive and it goes 100 basis points higher relative to 7.5, whatever you may have chosen at that point in time, now compared to 8.5 doesn't seem as attractive.
Okay. Well, yeah. So investors really have to really look into those options. And some persons were saying that, I think a few years ago, persons were saying that crypto was a edge or I want to find the right word, basically. Like gold, they used to say gold is an edge in these times. They were comparing gold to crypto, but crypto is crashing even more than stocks. So it seemed to be a very difficult time for investors. But Ruan, how would you answer that question straight to that person in terms of, would you tell them not to invest in a bear market, in your opinion, or in your own investment philosophy? What would you tell that person?
Well, as Jodian stated in our earlier launch, is there's opportunities in every market. When it comes down to investing, all right, you're really looking at the asset to return cash flow to you. And if you can find $1 for 10 cents, why not invest?
Oh.
So if you find companies that are cheap relative to their intrinsic value, and you can put some money inside of it, fine. It all depends on your time horizon. It all depends on your geographic location. For instance, if you're currently not in Jamaica, but you're overseas and you want a short-term strategy, bonds, you can go ahead and invest in bonds or preference shares of some blue chip stocks thereabout. You can look at corporate bonds as well. If you're in Jamaica, but again, retail traders wouldn't have access to certain fixed income markets. But you can go ahead and look at companies that are cheap and that retain their value. So it's all about the asset. As Warren Buffett would have said, or other great investors would have said, is buying in any market you feel that the price is justified for the asset. It all comes down to what the market is being offered to you.
Yeah.
And there are many reasons, vicissitudes in financial markets that give you the opportunity.
Okay. So, I mean, basically, time in the market
It doesn't
is
make
like
sense.
time in the market if you're really saying don't invest in. And we don't really know when the market will bottom out, as they would say.
Yeah, you can't time it. Well, I
I
would
guess
recommend that you try to time it. Probably you can, but I wouldn't recommend you try to time
you say they can try, but you would
it. I mean,
recommend.
I wouldn't recommend that thing, there are,
And then things like the Ukraine war, Ukraine-Russia war, I think that's contributing also to the global economy. So do you think like if the war, when the war, or if the war is over, 'cause I have to say I don't know the future. So if the
We
war
know
should
that
come to an
we know that
end,
the war will be over, but we don't know when.
I don't know if it will go further or escalate. But
yeah.
if the war should stop next year, say March, do you expecting conditions to improve after that?
That's for me, for Jody.
How about anyone you can?
I think in general, things are a process. So I think in the same way that we didn't just see the impact of the war when it just started. It took a while. I think in the same way, if it is that there is, or whenever there is a stop to it, you won't necessarily see a direct return to regularness right away in terms of not necessarily market prices, not necessarily asset prices, but in terms of how it is that things are happening. So I mean, I know it would have impacted some amount of shipping and oil and stuff like that. So it wouldn't just automatically reset to where it was before. There'd normally be that sort of process that it takes to work through.
Yeah.
But I think it would instill some amount of confidence. So in the same way, whenever it is that there was a declaration or the start of it, persons would have factored in what is that likely to be, and so it would have had that sort of initial impact on asset prices. If there should be a stop, then there's expected to be that sort of positive impact on asset prices. But in terms of seeing the impact of it is a process, so things take a while to get back to resetting. It's not instantaneous.
Yeah, and the market will probably price in either try to price in it before or after
Right.
based on signs. But I think I think oil companies benefit. I see Russian Pinnock mention war makes money. So I think that some companies benefit off the war, but it's not the majority. So you might have oil companies and you have the defense companies like Lockheed Martin who are supplying weapons, another company. Just like in COVID, you remember when COVID came and e-commerce companies benefit like Amazon and eBay. So each environment, you have few companies that benefit. Just like COVID, also, pharmaceutical companies benefit from that environment. Rasheen Pinnock, also said a while ago that what about building a dividend-driven portfolio? Or what would you answer that?
Well, I think once again, it depends on you as the investor, So there is that opportunity, but I think what you also have to bear in mind is that if you're going into a period where economic activity is slowing, then there is likelihood of probably reduced dividend. So if it is that what you considered to be strong dividend payers, so for example, if you look at our local market, a lot of the financial companies are reserving dividend. So if you look at this quarter, and in a period where you were anticipated dividend declarations, quite a few of the financial companies have said, hey, we're not paying dividend. So, it's also impacting in terms of other companies that may not be as adversely impacted. But if you're going into a period of slowing economic cycling, then you have to be very cautious in also what it is that you pick and choose to put in that portfolio. I think the preference share options would be one that works well if it is that you're looking to build that. But it really depends on you as an investor and what it is that you want to get from it.
Interesting. So yeah, because few companies I see mention that they are pausing, but it's mainly financial companies. So I guess you could look at like the other companies like that tend to pay dividend no matter what, like Carreras and
Yeah. But I think you have to also remember that during a COVID period, the payout per share, I think, probably dipped. So even though they may have continued to pay dividend, you could also expect that there's probably slowing because a lot of the factors impact manufacturing companies. So even though they are better able to withstand a recessionary period or a crisis, it's not that they are isolated from it. They're just better able to withstand. So you'd have to consider that as well in terms of when it is you're choosing companies that you'd want to put in that sort of for dividend payments. But I think, as I said before, the preferential options, would provide some sort of buffer, particularly in a higher interest rate market for those companies that may have a dip in terms of the payouts or may not be paying.
Okay, so I don't know if Ron want to add anything, but before I ask if you want to add anything, Ron, Rasheen, so basically dividends, you could expect dividends to fall for a lot of companies. So you have to be careful who you choose. Certain companies that pay dividend regularly, see they stop. The company that I'm looking for, if Scotia stop paying dividend, that is serious problem. But not to endorse careers or supreme ventures, I don't really believe in the products those companies sell, but our services. But I mean, you could look at those companies, but preference share and bonds, that's good options you could also look at, since those, you have a fix or you have a more guaranteed stream of income. I don't know if Ron want to add anything to this.
No, I wouldn't have anything to add. I think she illustrated quite effectively the type of things you need to look for. I wouldn't be investing in stocks for dividend right now, because during an economic downturn, why would you be paying a dividend and not acquiring or holding that on reserve for any economic contraction for your business? So you have to think about capital allocation and how managers has previously shown how they accumulate capital. Because at the end of the day, Lance, it all comes down to capital accumulation. I've seen where investment managers bought companies full write-out where the company went bankrupt, but they were able to squeeze millions out of it that created a market valuation of billions. So it comes down to the investor skill about capital allocation. So if you're investing in dividends as a strategy, to me personally, it wouldn't make sense, but nothing is wrong with it once you find those good blue chip stocks that have the reserve. That's all I could say. And regarding the war in Ukraine, if you read history, Lance, we are at a very, very huge inflection point in geopolitics. Because war in Ukraine, if you studied Europe, they were known for wars. And when they brought the European Union around, that kind of calmed things down. The European Union is now under threat. And most of it comes from the politics of the West, where they strategically boxed in Russia and all that. So after the Iron Curtain. So that war is gonna be a drawn out war, because there's no easy exit. And yes, and as you guys already said, there's industries that profit the most, and oil companies and war companies are the ones. And food, because food, the commodity, is under pressure because most of the wheat that we use and all that come from Europe.
Yeah.
But these are the times that cause World War II, high inflation and these type of mechanisms. So we're out of, I know, Trump around again, so you don't know what that go.
Well, there's not an next World War because it would probably mean the end. But I'm not in that, but an next World War would be different because, everybody is armed to the teeth now, so it wouldn't be pretty different. So hopefully we will get there, but for now, let's just look at this. So basically, I saw a company named Petrobras, a Brazilian company. They were paying dividends 60% yield. I was looking at them, but they are linked to the Brazilian government. The Brazilian government have, I think, up to 48% shares. So it's linked to Brazilian politics. But that company was paying some high dividends. You're talking about yield of 60% and up. So I mean, you could look at that company, but I would.
I mean, Lance, once you see a company paying that type of dividend, it's really the investors are pulling the money out of the company. It's just really that they're milking the company to bankrupt or something. So there's a going concern there. There's no rational investor gonna be pulling 60% out of a company.
Yeah. Yeah, I'm gonna look at the next question. We have Stefan Flowers. Welcome, Stefan. She said, Stefan. So, of the US, what's I'm trying to understand the question. After the US goes into recession, how do you think it will impact the Jamaican stock market? Well, if the US goes into a recession, it will definitely impact the Jamaican economy. So if you remember, Jamaica is dependent on tourism, and tourism is our biggest industry. And I think over 50% of the tourists are from the US, so that will definitely affect us. The next second we have remittance. Our biggest contributors for remittance is the US. So it's definitely gonna affect us. Yeah, the extent, I don't know the extent, and it depends on the depth of the recession. So that's what I would say. I don't know, Jordan will answer, or Rowan, what your thoughts on that?
I think I'm in agreement. They're one of our main trading partners. So I think in terms of if we look at companies locally, we do exports to the US market. And so, persons naturally in a period of economic downturn or recession are going to, cut discretionary items first. So whatever sort of discretionary goods it is that we export, so whether it is vacations or food that you don't necessarily need to eat every day, those companies would be impacted. Already in terms of remittances, we do have companies on the market that would, play in that space. And so there could be some impact for those companies if it is that, that country is in a recession, then persons possibly are losing jobs. So if I've lost my job or I'm in fear of losing my job, I may be sending less or none at all. So I would really have to be building up my own personal reserves, even if it is that I have not lost my job. There's that possibility. So I at least want to build up a little reserve should it come. I can't tide myself over for a period. So I may be sending less locally. And so if it is that I am dependent on remittance as a local for my household, then it may mean that I'm spending less with some of these companies that are listed. And so that would have some sort of impact there.
Okay, definitely. That's a good answer. Stefan asks another question again. Why isn't the rise in interest rates being reflected in stock prices of financials? I assume it's financial companies. Isn't rising rates helpful to financials?
So I think typically yes. But if you look at the local market, it's a competitive space. I think if you look at probably a period of 5-10 years ago, in terms of building out in terms of banks, there are really two big banks. So even though there are still two big banks, there's still quite a bit of competition that has come into the local market. So even though the rates are higher, my ability to pass on that is not as easy. So you find that mortgage rates, even though BOJ policy rate has moved, your mortgage rate, never move until like about a good 6 or 7 months after BOJ starting to move. And so there is that competition. So in terms of being able to pass on the high rates, it's not as easy as it used to be because of the competitive space. So if I am with Bank A and they come and they say, oh, I'm going to increase your rates, then I'm just going to go to Bank B, and if they can do something different, I move. And so in that sort of competitive space, they're not able to pass on that sort of high rate to consumers. So when you look at the difference between what they're earning and what they're paying out for interest expense, it's not as great as it would be if they could pass on the rates. And then the other big thing for banks is for financial companies on a whole is that they do their own internal trading. So what it is that they do with the capital that they have that you give them, they have to invest it in some ways. And I think the last time I was on, I think Ron had asked about, where it is that you can put your money. And these institutional investors don't have much options They are limited by regulations in some ways as to what they can. And so you find a lot of them, invest in some amount of bonds. And when interest rates go up, the value of bonds, the price of bonds dip. And so that valuation weighs on financial companies in terms of their profitability. So it weighs in that income statement. And so if it is that those are falling, then as an investor, I am valuing financial companies a little bit less. So that's why you would see a dip in the stock price and not necessarily an increase, as it typically be the case because interest rates are rising. So it's not that it's not impacting, it's just not impacting the way we are used to it impacting.
So there goes a question, Stefan. That's a good answer. The
I
banks
hope
are,
that helps.
yeah, it explained to me how that helped. So basically the banks are more competitive now, so it's not easy to really pass on those rates. In the US market, it might be a little different, but I'm not really
Yeah,
entirely
I mean,
sure.
you do see mortgage rates are moving a little faster upwards in the US market than they are in the local market.
Yeah.
And even rates for car loans, I think we have seen an uptick, but it's not to the extent. So I think BOJ policy rates move like 600 basis points or 550 or something like that. And I don't think anybody lending or as a consumer, you haven't been seeing that increase in terms of your own borrowing. So I mean, your car loan rate did not increase. I think the most probably go up is 100 basis points. So they're not passing that on.
Yeah. Yeah, so yeah, basically that I think that answered the question. That answered the question. So basically, let's see if we take one more, then I have a question for you guys. During the last recession, Aline Wilson, during the last recession, do you remember which companies did well and why? The last recession was a short recession. It was a COVID recession, but it wasn't a typical recession. It wasn't as long, but you know that e-commerce companies did well during that recession. Pharmaceutical companies and I think food companies did well also. But you have to look at what caused the recession. So that has a role to play in it. We are in a different environment from 2020. 2020 was a shocker. That was a big shocker. So I don't know, Ron would answer that question. Ron.
Are they talking about the local market or in general?
Yeah, well, that's the next thing also. Because we don't have much real e-commerce question in Jamaica. Talking the US market. Well, in Jamaica.
Well, in Jamaica, the companies that they do well are those that are multi-conglomerates. So you have the Grace Kennedys, the Wisynco Group, the NCB. In Jamaica, there's a few companies that own the infrastructure per se, for the company actually countries operating. So you don't need to really move around much in the local markets, because if you look at how the economy of Jamaica is structured, there are only few big trading companies. There are only few big companies that do financial products and operate on a certain economies of scale. So you don't have to move much around the local market. You just have to look and where people buy their food, who's the largest distributor of food, and who is the largest exporter and all that stuff. Overseas now is different, but it comes down to recession, as you already say, is really the causes and what are the causes of that. So if you, for instance, back in 2008, it was actually the housing market. So you wouldn't want to be in a company that's heavy in mortgage. You wouldn't want to be in banking stocks as well that have credit default swaps on their book and all that. But in America, it's the same thing. There's a few if you watch what Warren Buffett does, you have the Coca-Colas. Coca-Cola did well. You have companies like Canadian Pacific Railroad, Berkshire Hathaway. You have companies that actually own the infrastructure. You have Geico, which is owned by Berkshire Hathaway. You have Precision. You have Progressive insurance companies. you know, you just want to focus on when it comes down to a recessionary period, don't look too much in the hype stocks. Look on stocks that are fundamental to how society is operating and how cheap they are, and you'll be good.
You're saying stability and boring.
Yes.
Yeah, I guess it's all about your philosophy. And yes, definitely, those companies tend to do well in most environments. The traveling companies got a beating during COVID, but it's different now. So even if a recession, I don't think the recession, to me, in my opinion, I don't think it will be very bad, even if there's a recession. So maybe people will still travel, but it just might be a minor impact. Yes. Ron, I want to ask a question. So we all know, I don't know, most persons, or some persons might know Michael Burry. He was saying that there is a impending, we're in an index. We're in a bubble right now for index funds. What do you think about that? And if I want to give you a context, I can give you a context.
No, I understand what he's saying, and it's a law of supply and demand. I understand what he's saying. Wherever there's too much supply, there has to be a correction. And what happened in the index world is this: a huge majority, trillions of dollars, from pension and sovereign fund, from institutional banks and individual investors, everyone is moving into indexes. How the index is developed is a matter of question. So what that happens is it end up overpricing most of the equities that are in holdings. And by doing so, it creates a more general drag down on the general stock market when the correction do happen. So for the correction that Michael Burry he is actually expecting is that he expect at least a 40% decline in equities, because he's stating that over the last decade, the low interest rate and access to cheap money has pumped up a lot of indexes where it's overvalued for majority of the stocks in the indices. So he's short in the entire, most of the market at specific areas of the markets. Because indices doesn't have to be, it could be the S&P 500, it could be sector dominated, etc. So you really don't know where he has his hedges on, because he have a lot of credit default swaps as well and other options on the market. So you don't know exactly where he's shorting. But in general, he's just making reference to that the market is really overvalued and the equity market isn't really pricing the type of stagflation that he's expecting. And you have a lot of well-known hedge fund managers who saying the same thing as well, because of the way how the history have proven.
So basically, it's a bubble then, what I'm getting.
Yes, it's generally in a bubble. It's generally in a bubble.
They said that one research said that I think it was BlackRock, they said that regarding the ETF flows, only 5%, when you look at the general volume, only 5% affect the market. So Michael Burry is saying that basically all theaters, I want to quote what he said exactly. He said all theaters are crowded and the only way anyone can get out is trampling each other. So to me, if that should happen, it have to be some big news or some big event gonna trigger that.
Liquidity. He's mostly talking about liquidity to exit, to move out of the market. And and also what's really, if I'm not saying it's gonna be doom and gloom or whatever, but it's not gonna be an easy correction for the markets, because you have another 300 trillions of dollars again in individual mortgages. Mortgage expenses are gonna be a serious problem with the inflation that we're having now. And jobs are, as you can see, as I stated in a post way back, if you read it, where the markets really haven't catched up yet on job declining because of the balance sheet that corporation as well they have, because they stack up cash over the last decade, so they could continually pay the increased wage, But now the market is pricing in the expense from interest rate. So now you're gonna have jobs where job growth is, you're gonna when it start cooling down, and then you have the mortgage expense and all that coming on household, then you're gonna have stagflation. You understand what I'm saying, Lance?
Yeah, I'm just saying that's gonna be gonna take a little while.
Yeah, it's gonna take a little while, but
Yeah.
in general.
Interesting times ahead. That's why persons should really try to understand how the market works, because that would be crucial. Even as we say, as a value investor, if you're going to invest, don't follow the hype. To look at value, it's even more crucial now. That's especially for long-term investor. Short-term, no, people can do whatever they want to. And that's more riskier. But this is all about investment.
Yeah.
And private business, if you own a business right now and you're operating at a good cash flow, it's best to retain the cash flow and observe the market. And that's where Michael Eaton, he comes in and he tell you about, because he felt it in 2008 when he was running AIC, when the market really made a correction, and you know what happened to AIC and the bank, because most of his investors were institutions, and what the correction did to his business. So if you own private business, then you can withstand the market vicissitude by having strong earnings, and it all comes back down to earning power.
Okay.
I mean, just to add, Lance, I think you're saying that, you know, for investors to have an understanding of the market. But, you know, even if you may not have a full in-depth understanding, just have idea of basic questions to ask. So whoever is advising you, you know, you always want to circle back to how is this company earning? You know, where is their money coming from? And then, you know, what is that going to play out in a market to come? So asking questions is always good. So even though it may seem like, you know, it's obvious or it may be a dumb question, to always ask your advisors questions so that you can, you know, get their response to say what it is that they're thinking. Don't just take a recommendation as a recommendation. You know, dig deep, ask why this one and not that one. So if it is that they're saying, you know, by Grace, ask, you know, why Grace, not Lasco, and you know, so you can get a general understanding of what it is that you're buying into. So even if you may not have, you know, full in-depth understanding of the market, make sure you have a little bit of an understanding of what it is that you're buying and why you're buying it.
Yeah. Yeah, good. So, thanks for your response. So basically, we just have to just look at our options, and you have to just look at everything. You have to question everything now, as Miss Iris is saying. So, Rasheen Pinnock asks another question, and he's asking, would you say there's arbitrage in the mortgage market in Jamaica? I'm not sure about that question.
Ask him how he's gonna execute that that arbitrage.
That's a
And
good
when you talk
question.
about arbitrage, he's talking about the interest rate differentials in the different markets. But we're not securitized as the US.
Yeah.
We don't have that type of infrastructure for securitization. So I understand what you're saying, Mr. Pinnock, but we don't have that infrastructure. And how would you know? We don't have that type of transparency either when it comes to mortgages. So I get what you're saying, but I don't think we have the infrastructure for that right now.
Yeah. So people who's watching our live, please subscribe if it's your first time on our live, and share the link. Any more questions, please ask them. We're gonna ask Julian and Rowan 3 companies that they are watching for the next year or so on. And then we're gonna look at those final questions, and then we're gonna close up in a few minutes. So Rowan, any company that you specifically have an interest in that you're watching and see? Any 3 companies? It doesn't have to be the Jamaican market, could be the US market. Let it be the US market? Because I know that you love to invest more over the US market.
So I'm looking at if you're looking at overseas, I'm looking at the Canadian Pacific Railway. I really like that stock. The return on invested capital has been good, even especially during economic downturn. They have a proven history. I know that we're gonna keep moving freight across North America and all that. So it's a viable business regardless of the economic downturn. You know, I love Berkshire. Probably it's the only stock I invest in right now. So you know, Berkshire Hathaway, if you look at the market valuation of the assets and you look at what the market is valuing it, it's about 34% discount to fair value. Other persons don't see that. In Jamaica, I'm very bullish on NCB. And Lance, you know, we as entrepreneurs, you know, we had a big question from way back. How can we have a viable payment system in the country? And I think if Link is executed and the penetration that they are anticipating is successful, that would be big for NCB, but also big for the country as well. You know, so I'm very bullish on NCB as a bank.
Oh yeah, and Link is also entering the remittance market now. So they're tapping into one of Jamaica's biggest GDP contributor. So that's a good company. Your three company, Julia?
So I am looking at companies that have cash. I think particularly in a climate where valuations are going down, you could see some of those larger companies that have cash, you know, be able to buy something good at a cheaper price in a possibility of a downturn. So I'm looking at, you know, companies with that sort of a heavy cash. Are looking for stability. So I'm not necessarily giving a name of a company, am I? I'm looking for stability in this period. I'm also watching the financial companies just on the basis, even though they are facing headwinds, they are facing some strong challenges locally. There present opportunities with that revised valuation downward. So you still want to look at what is the core of the company. Is there a possibility to buy in now and probably take a little bit of a hit for a possibility of, you know, a good return probably 2 or 3 years out. So looking at those to say, you know, what is the outlook for that. So I think in terms of particularly names of companies, I've always, from a local side, I think our Cinco is one of those that have strong balance sheet and is in a space that may not be heavily hit or can be able to withstand you know, recessionary periods, and they do have a nice cash balance that if it is that something should come up, they are able to make an acquisition. I think another company that I am looking at, not necessarily for purchase or bullish, but I also heavily watching is Derman. I think their results this quarter was a pleasant surprise in terms of somewhat of a turnaround. I think because of the big heavy APO that they did, you would have seen that sort of dilution. But they did make some acquisitions. Also heavily watching is Derman, I believe. I think their results this quarter. Can I go again? Yes.
Yeah, continue. I think there was a feedback.
Yeah. So I think in terms of them, I think when you look at their performance this quarter, I know persons in the industry have indicated that the purchase of, I don't know how to pronounce, Rosa, I think, the meat company, I think, should provide some amount of stimulus or impetus in that area. So I'm watching that one. I think I want to see a little bit more in terms of how that play out, and not so fully in terms of the New York mom and pop shops that they bought, and not too affair with it or too fully seeing the returns on it as yet. But that's one I'm definitely watching to see what it is that they do and how it is that they're going to continue if they can with some sort of turnaround. And
Okay.
that's 3, right?
Yes, true. Yeah, well, your name Derman.
I said Wesinko, I didn't get a third one. I think so in the financial space, I don't know that I think I'm looking at, I'm not even sure. In that space, I just watching the general space to see what will come out as winner. So I don't have one at this point in time that I'm like definitely saying, they could do well or they couldn't do well. But I'm definitely watching that overall sector to see what could come out of it. So probably after December quarter, I can say specifically which one out of that bunch I want to put a pick on.
Okay, cool. Yeah, I list my companies. I do a few videos on my companies already. So guys, I'm gonna name it. You can watch the videos and I explain why. So locally, watching Wisync also because of your strong cash balance. And I'm watching the financial companies. Well, mainly NCB based off valuation. Um based off the valuation, and also I'm looking at I think two companies mainly locally. There are others that I'm really like watching. I think I was looking into the nuts for the express, but I'm not sure the valuation is where it should be for me yet. But
It has a little bit further down to go, you're thinking, or?
yeah, yeah, because the company is recovering. Well, it started to recover, and revenues might go up. I'm gonna watch the next quarter or two, and then make my decision. I put it in a video a few
Okay.
weeks ago. And internationally, the US market, I was looking at Google and InMode. Those two of the main companies that I'm looking into. InMode is a biotech company. They deal with like health products, health tech. So like, persons doing a lot of cosmetic surgery and body tight and all of that. There's an area that I'm looking into. So, and that company, it's been performing excellent over the last 10 years. So, and the company has been trading down, going further down. So it's a company that I'm watching. Ron, once upon a time I already talked about this company name. It's a P name, but yeah, it's a data company.
Oh, I invest in it too. Palantir, yeah.
Palantir.
They reach operational efficiency where they have positive operating cash flow now. I think the last time I checked it was about $800 million. It's a company where if you understand artificial intelligence and how it's being used, then you understand what they're trying to do. And if they're executing quite well, it's a good company to own for the long term if you're focusing on long-term investing. Because the stock went up about almost 200%, but it back to where it was public offering. But it's a good stock. I think you should read. And what they have, the problem I have with them though, is that they're having too much government contracts. I would rather see more diversification in their revenue. But it's a company I'm watching. I read the financial statements and the quarterly statements as they release to see their development. But I want to say to your viewers still, over the years, I have realized that some of the best investments I have made are the investments that I made in myself, are the investments that I made in deciding to buy a book and either pay for a course online to learn a new skill. Is the invest I make thinking about long-term things. So sometimes you have to really look. It doesn't always mean you have to be in equity for a quick cash. It can also mean investing in yourself for the long term. So in these periods, nothing beats earning power. And if you can develop a skill that earn more money, then go for it.
Yeah, owning a business too is something. Owning a business or yourself, as I said. So those are good years, definitely. Yeah, so because we're investing in CFA and we're doing courses online. We're all about building ourselves. So sometimes a lot of time persons ask me what to buy, but if they just do some reading and your books, you can read like Intelligent Investor and I think you have one name, Common Stock, Uncommon Profit. And those type of books, I'm gonna make a video on books to read for beginners. I think. I'm gonna do a
You may
video
start
on
a book club too, or just books?
that would be good. Yeah. Yes, I'm
And
gonna
you
do a
know,
video.
you can read a lot of financial reports. I have about 400 pages to read for the weekend or so. But reading a lot of financial reports and studying the companies, you learn a lot.
Yeah.
I listen to me. If you want to learn about business right now, read Berkshire Hathaway and read Amazon. Just take your
Yeah,
time and read through those two reports, and you'll learn so much about businesses. You learn so much, trust me.
yeah. Yeah, that's one of the thing I like about some of the US companies. When you read your annual report, you're learning business strategy. So I want to read Amazon. When I listen to Jeff Bezos speak.
Yes, and read this first. One of them I have to go back over. I think is year 2005. Like he actually he gives you business principles. That's why Warren Buffett is so upset that he missed it. Like he tells you about the strategic advantages he would have with economies of scale in developing this vertical. He lays out everything from early on, but you know, so much people missed it.
Yeah.
Yeah.
But I think I'm just in terms of our market, I think once it is that, with programs such as yours, Lance, and more of these, then you find that there is a little bit more expectations and requirements for companies to share more. So persons are not just, it is going into an era where it is not enough to say profit increased or that's what happened. I think investors are requiring a little bit more. And so there's always that opportunity. So once it is that you go through the financials as suggested and you're reading things to attend AGMs or to speak to them, you're as a shareholder, you can ask your questions. And so, you can also learn a little bit more and pull out some of these strategies, from them. So I mean, they're not always, but there is an opportunity to have dialogue as well. Even if it is that you're not
Yeah.
necessarily seeing it in black and white. But definitely do agree that there's a lot that can be learned from general just reading the financial statements.
I feel like in Jamaica, one of the main reasons why I don't invest much, like push hard to invest much in local markets is, for instance, there's companies that they do really well in illustrating what they're doing, like Honeybond. I read Honeybond financial statements from the first time they released to now. And I understand the company, I understand how they allocate capital across and how they think about efficiency and how they develop in their brand. So those, when you're able to read financial statements like those, they're able to really understand the company, understand the management. In Jamaica, you have a lot of companies that give you the bare minimum. And that's what I really don't like.
Yeah.
It's too much ambiguity.
Yeah, no like a forward statements. It's just this is what happened and nothing to say, oh, we're planning to do this or this is ours. Yeah. I always say there.
Yeah, definitely. Yeah, so I feel one more question and we're going to answer this question and then we're gonna wrap it up. Yeah. So Seban Henry, how important is the leadership management of the companies? Well, that's very crucial. So you have to make sure the manager have the shareholders as a shareholder, they have your interests. And in terms of strategy and business, or they execute, the leader, you have to look at the acumen as leaders and or they get customers and all of that. So it's one of the important factors, qualitative factors when it comes in terms of analysis.
I think it's the most important because I ask myself that same question, like, have I ever known a company that without a management in place, how they will survive? Because I was saying Coca-Cola, but then Coca-Cola, they changed the taste of the product and it caused a big revolt. I was saying Wells Fargo because they have access to cheap capital and they have one of the largest deposits back then at the time, but they create a perversive incentive structure that caused the companies to be in crisis. So at the end of the day, the most important thing for a company is really the management. Because the management can create or break a company. Some management are just there to maintain a company. They don't do anything to maintain it.
Yeah.
We have others who can really accumulate capital.
Yeah, I think you want to look at the vision. So as Ron said, you have some people who come in and they maintain. So they say, all right, this is what you have been doing, and I'm going to continue to this. So we have 3 lines of business, or we have these 3 process systems, and we're just making sure that these continue to flow. I think you want to look for leadership that is probably coming in and questioning, not just necessarily continuing or maintaining what is there. Because as an investor, I'm buying in for growth. So you want to have, looking for leaders that have some sort of vision, some sort of plan for a company, not just somebody who coming in to just maintain what is there. So it plays a factor into how it is that things operate. So even if you think about it, if it is that you are an entrepreneur, you probably look at, there are different styles and how it has impacted your business as you transition as you learn. And if you look at yourself as an employee, you realize that you may have, throughout different jobs or working with different leadership, they may have gotten more out of you than another person, or you may have flourished more on that particular style of management or leader, just based on who that person is or what it is that they brought. So it does factor in quite a bit in terms of the performance of a company. So even though you may have a good stable company, so if you look at probably companies that pass on from generation to generation, so you may hand over your company to a child that don't have an interest in business, and then you just see a big company just can't manage, and another company come in and just run them over. So it plays a very crucial part.
Very crucial. Yeah. Yeah, so I think we pretty much answered that question. Yeah, so I don't see any more questions yet. So I think that would be it for tonight. I've been getting a lot of questions online on Instagram. It seemed to be a lot of beginner questions. I'm going to do a crash course just for beginners. A crash course next week. So subscribe and stay tuned. I'm going to do a live crash course and to help out as much beginner investors as possible. And regarding the books, I'll suggest the books in that live. And so thanks for everyone that has been viewing our live stream. And it was a pleasure to be here speaking about investment and the stock market. Thanks to Jody for passing through again. It's always a pleasure to have you
You're
here.
welcome. No worries.
Rowan also, it was a pleasure to have you. Brilliant investor, young entrepreneur. So we'll call it for tonight. Guys, I hope you enjoy the rest of the night. And stay tuned for the rest of the videos and live stream. Take care.
Good night, guys.
All right. Bye, everyone.
Bye.
Good night.